Hello and welcome back to my lesson. In this lesson, you will learn about define the strongest supply and demand zone. So let's get started. So first of all, I will teach you how to define it. And the second one is how to entry with the strongest supply and demand zone and normal supply and demand zone. The last one is some example. And the first of all, how to define the strongest supply and demand zone. To define it, you need to remember again, supply and demand, it means that it's unbalanced between the buyer and the sellers. Therefore, to define it, you need to know the obvious unbalanced place. This is the strongest supply and demand zone. And we have three factors to define the obvious unbalanced range. The first one, you need to see at least two first candles after the reversal place is a Marubozu candle, or the show you the strong movement from the peak of the market. And the second one, price reversal immediately will show you that a lot of the buyer wanna join into the market very strong. And the last one, how far price can go from the first candles. This one is very important. You need to understand three factors to define supply and demand zone. So let's see some example at this time. And the first one is the strongest demand zone. You can see that at this time price go into the down movement, create a peak, and from this time you can see price create 1, 2, and 3 Marubozu candle go up continuously, and price already changed from the down movement to up movement immediately. Only hold on at this level 2 candles, and you can see that price go quite far from the first up Marubozu candles. Therefore, this is a very strong demand zone you can see on the market. And on the left side is the strongest supply zone. The first factors you can see 1 Marubozu candles, and after that we also have 2 smaller Marubozu candle. But the first Marubozu candle is very big compared with some of the up movement on the left side. And price already reversal immediately. Just hold on this level 1 or 2 candles, and so from this level price go quite far. Therefore you can judge it. This is a strong supply zone in the market. And from the first time you already learned about the 5 types of the supply and demand zone. From the left side to the right side. On the left side here is the strongest supply zone, and on the right side is the weakest supply zone. You can pause the screen some of the minutes to understand and remember about this case. The strongest is a no base, and the second candles is 2 peaks. It means that it show you a lot of sellers push the market go down sharply. And on the right side, at this time, you can see the first candle is 2 weeks. It means that a lot of the buyers still wanna push the market go higher and just have a very small the people wanna sell in the market. Therefore, this one is the weakest of the supply zone. And on the demand zone, also the same theory. And you can use these types to define strongest and weakest supply and demand zone on the market. This one is very useful and can help you avoid some of the case hit your stop loss because you entry as a weak supply and demand zone. And now is one of the very obvious example to see how the market changes from the strong demand zone to the weak demand zone, and when price go to the weak demand zone, price will break. And you can see from the left side to the right side, here is the strongest demand zone at this time. You can see that price go down very slowly, and at this time, price just hold at this level several candle and push go up again with a 1 big Marubozu candle and go very far. Therefore, here is strongest demand zone at this time, and when price go to the strongest demand zone, price go up again immediately. But at this time, when price come into the strongest demand zone at the second times, you can see that at this time price hold at this level 1, 2, 3, 4, might be 10 candles. Therefore, at this time, if you draw in the second demand zone, you can see that this demand zone is weaker than the first demand zone. First demand zone very obviously that the market change from the downside to the up movement immediately. But at this time, the market change very slowly. And when price go to the weaker demand zone like this, price will break. If you entry at this time, you will lose immediately because this is a weak supply zone, a demand zone. But if you entry with a strong demand zone like this case, you can take profits at this supply zone. This is very important to understand how it's strong and weak in the market, and totally how to entry with the strong supply and demand zone or the normal zone or weak zone. And here is the first theory, strongest supply and demand zones. For the supply and demand zones, very strong, you can set limit orders above a supply and demand zone and set a stop loss below a supply and demand zone. If the supply and demand zone is quite small because they have the base inside of supply and demand, you can set the safety zones to cover the stop loss. To avoid some of the high fluctuations in the markets can hit your stop loss and take profits in the next supply zone. That is very best to trading with the supply and demand zone. And here is example to trading with a strong supply and demand zone on the Euro USD daily time frames. And you can see that how can I get the reward per risk is more than 2 times. And let's see at this peak, you can define this one is a very strong demand zone because supply changes immediately. And the first and the second candle is a Marubozu candle, go up very strongly, and from the first Marubozu candles, market go quite far, and we can define here is a demand zone. And at this peak, you also can see that here also a quite strong supply zone, and therefore you can buy limit above a little bit of the demand zone and stop loss below of the demand zone and take profits near of the supply zone. So let's see how the market run. And you can see that the market go very slowly into the demand zone and go up again. At this time, your limit order already hit and you can take profit at this time. I recommend you just take profits a little bit very near to supply zone because supply zone already have the seller focus on here. If you get this take profit very far, might be the market cannot hit to the take profits and pull back again. At this time, from the profit trade can come to the lose trade is quite make you lose confidence while trading is very important. And at this time, you can see that we have a reward per risk is more than 2 times, might be 2.5 times. Very bad trade in the market and quite easy to understand. And now, how to trading with a normal or weak supply and demand zone. You can see that when you define up the weak or normal supply or demand zone, it means that have no more the people want to join into the market. Therefore, you need to wait the confirmation. For example, for this case, is the demand zone. You need to set an outlet above of the demand zone and wait. When supply come into the demand zone, you need to check is there any buyer join into the market. Beyond some of the signals, is a double patterns, is an engulfing, is a mapping pattern, star, evening model, or the bean bar model. And if everything is support to your buyer signals, you can entry into the market. But if everything is not support for the trade, you can skip it. Don't join into the market if you do not be confident. And now is our example on the Euro USD daily time frames. You can see from the left side to the right side, we can define the first one is a supply zone, and on the lower is a demand zone. And you can see very obviously that at this time, supply zone is more stronger than demand zone because supply zone will create the 1, 2, 3, 4 down Marubozu candles continuously. And the price change from the up movement to down movement is very quickly and quite far from the first down candles. When you come to the demand zone just go up 1, 2, 3 up candles. But at this time, in this up movement, just have 1 Marubozu candles, and the market go from the first up candle is not far like the down movement. Therefore, at this time, the supply zone is more stronger than demand zone. You can define the supply zone and demand zone like this. But in this example, I still want to give you to buy at this time because we're gonna go with the weak or normal zone. And for this case, you need to set an outlet above of the demand zone. And when supply come into the demand zone, the market will give you some email or some of the messengers to alert to you. And at this time, when you open the chart and you can see that now the market creates an engulfing pattern, it means that you can buy at this time. And at this time, you need to wait another pullback into the market because the demand zone is quite weak. Therefore, the market will retest many times, so no need to miss the chance. And you can set a limit order above of the demand zone and stop loss below of the demand zone a little bit and take profits in very near of the supply zone and wait. And you can see how the market run from the weak demand zone like this. The market pullback one more time, and when the pullback market confirms to have no more of the seller of this demand zone, and push price go quite strong until of this strong supply zone, and take profits. And therefore, and this is a very obvious example show you how to trading with a normal or weak demand zone. And in the supply zone, everything is the same. You can apply the theory. And that is all about the lesson today. Thank you very much and see you in the lesson.